Retail, not so hot. Tech, let's talk about energy and where the profits are going. Coming up on the job. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It is 7:49 here in the middle part of the country on Friday. Happy Friday to you. It is January 27th, 2023. Here's your morning jog around the economic headlines of the world. Let's go with a couple of bad news stories and then a good one. Bed Bath & Beyond now defaulting on its credit line. Guys, this is the end for the Beleaguered company. It will now go into bankruptcy court. And we will find out what will happen to all that real estate. Probably not much, quite frankly. They would just default on those leases and go on down the road. Do you really think this company has a future in the retail space post-COVID? Maybe not. It just is empty. Folks have abandoned the stores. Not a good sign for Bed Bath & Beyond, a darling wonder stock of COVID. Let's talk about Intel facing a chip glut, not able to sell their chips. This is why, folks, there are typically no value stocks in tech. The scales run ahead of you, and if you are not growing, it becomes awfully muddy, awfully quick. Not a great sign for sort of value-y tech in this time. Growth taking a beating as well. Let's talk about a place that is doing well. That's Chevron. We talked about the not so great buyback policy. We like the policy. We don't like how they announced it earlier this week. $36.5 billion in profits. That missed analyst estimates by about $700 million because of some write-downs of international assets. Fine. Multinational oil companies get to do that. Now let's talk about why Chevron and why oil companies are making so much money. Of course, it's pretty simple. The price of oil has gone up above historical averages due to the war in Ukraine and some other structural supply deficits that have nothing to do with the war in Ukraine. Ultimately, ESG and their ilk underinvested in energy for a decade. And after that, you get continued population growth. Guess what? You have continued energy demand and thus a shortage of fossil fuels worldwide. That's just the math, folks. It's not me. I'm not beholden to any sort of interest here. But why do the profits of the energy sector go up so much, and why might it save our economy from a recession as so many are predicting? 2 words: operational leverage. When prices go up in the sector, energy companies take that money and have it go directly to their bottom line. This is a chart of revenue per employee among all sectors. Energy just head and shoulders above others, like healthcare, like tech. Why is that so important? Well, it means that when prices go up, you don't have costs go up. Your margins explode, and thus your profits do too. So of all of the things that have happened with this war in Ukraine and all the things that have happened with ESG underinvesting in the space for years, that is coming home to roost, and I don't see any reason for it to stop soon. If you want some additional info throughout the weekend, feel free to find me on the internet. I'm out there. Till then, you and your family have a wonderful, fantastic weekend. I'm out.